Hi there. A very good morning and good evening to all of you, depending on wherever you're watching me. This is Simply Stocks, and I'm live with this live session with you all. And hopefully, all of you are doing well. And today, it has been quite a while since I have been online, some weeks, and the videos have not been coming as well. And it has taken a lot of time for me to build this up, and we'll discuss about the reasons as to why I was not online, why the videos kept going out, and there were days for weeks, probably a week, 2 weeks, no videos came up. So we'll discuss that. I'll discuss about the markets as well, and plus I'll also talk about a couple of stocks which look pretty interesting, pretty good from uh, 1 year point of view. The stocks have fallen, the stocks have gone down, and these look attractive from that point of view. So two three stocks I will discuss with you uh, as well, which come to my mind, which come to back of my mind. So we'll discuss about all that. I wanted to be online, it's and that is why I've come late night online live on your with you all to share some news as well with respect to family, etc. And so if you remember, about 2 months back, I did put up a post that there were issues in my family, issues with the health of my wife, and it has been a couple of months of going to the hospital, coming back, and taking care of my 4-year-old child, which I was taking, and everything. So that has eventually reaped a reward. So what eventually, you can say, culminated into was that we had a baby girl just about 3 4 days back, 4 5 days back, and so that's a new member in our family, and there were issues in that over the last 2 months, in the last 2 3 months of a pregnancy. And so that was the major reason for me being offline, and taking care of family was first and foremost. Things have settled down, alhamdulillah, and so we are now blessed with a baby girl. So I have a boy and a girl. That's pretty magnificent, and so a little haphazard at home, and but I have got time to just go live. Probably I'll have 3 live sessions per week for the moment, for about 1 or 2 weeks, and then we'll have the videos coming in as well once I build up the videos from next year onward. So that was the prime reason for me being not in connection with YouTube, and bringing on all those videos, etc. But hopefully, things should streamline from January onward. So keep supporting, keep liking videos, and keep viewing it, sharing it, so that it gives me monetary as well as emotional support for continuing in this endeavor of finding better stocks, companies to invest into going forward as well. Very happy to share this news with you all, because uh, some you can say some 2.5 months back it was looking pretty grim, but alhamdulillah, things have panned out pretty well. Although it took a toll on all of us, whether it is my elder, you can say, uh, son Imad, or my wife and me, but we have gone through it, and come out as winners. So with the grace of God and all your wishes and support, thanks a lot for everything. Thanks a lot for all the supports and wishes that have poured in during that period. I have been not online, I have not put up videos, but my subscribers who have been with me in September, October have only increased and not decreased. That was the uh, biggest, you can say, strength for me at this point of time. So hopefully now things should stabilize, and from next year onwards, more of such videos would come through. uh, Plus I have been talking about this since the Olympics, which was in 2021, that I'm working on you can say a course or some video streaming in which it could help new investors invest into the market in a better manner. This is more of a psychological course that I'm bringing up, the psychology of the market that I'm going to put up. Now, from January onwards, in earnest, I would be working on it. That's what I'm planning. And hopefully by April or so, March end or by April end, uh, it could be launched in a manner in which it would be like a coming as a CD or as a set of some GBs that would be coming to you and could be digitally sent to anyone who wants it through a, you can say, a nominal fee that would be attached to it. So we'd work on that as well, and the normal videos and everything would definitely come through. So thanks for all the patron members, all the WhatsApp members, and everyone on YouTube for all the support. Now coming to the markets, let's discuss about the markets. Although I must say, and I will be very honest with you, that I have not tracked the market that much as I was doing earlier. But what I can tell you is that once the market breached 18,000, 18,300, it was destined to move into new highs, which it did. And then there was so much of greed that was all around that it was just waiting for one news or the other to fall. And the fall took place around 1,200 points, got shaved off from the market within a matter of, say, 2 3 days. And the mid cap small cap index did not you can say perform that well. The mid and small cap index went up, but not in the same manner, but did fall a lot. So I find a lot of value in mid and small caps at this point of time after 1 year has passed, rather than the large caps. Although there are a number of consumer centric large caps that have not done that well as well. So, what I can say about the market is that because of the bank nifty, it went up to 18,800, 900, around those levels. And once the bank nifty cooled off, the market fell because the other sectors did not perform that well. So, it was not a secular rally in the market. And what I feel is that now we could be in a situation in 2023 where all across the board, other sectors should start performing and should start contributing to the move. And more or less, more than the Nifty, it would be the mid and small caps that should start performing now. In fact, micro caps have been doing reasonably well over the last 2 3 months. And so I feel the mid caps, those which are in the bracket of 10,000 to 40,000 crore market cap, should start performing from here on in. So one who has the patience to hold on to these, even though they did not go up over the last 3 months, could be rewarded over the next 6 to 8 months. So that's the call from me on the market. One should be looking at, you can say, something like a mid or small cap company rather than looking at the larger ones or the Nifty itself. So that's about the markets. Let's now discuss about three stocks, 2 to 3 stocks that I want to bring to your notice, which I believe that should perform well going forward. That are coming at very reasonable valuations or have fallen so much that the margin of safety has become very attractive for these companies, and they are pretty familiar names. So you would not say that. These companies are something that are hidden gems or something like that, but they are at attractive valuations at this point of time. And although you might disagree with me, and that is your right, but I feel that after such a fall and at the valuations that they are trading at, they look pretty good. So number one in this list is FSN e-commerce or Nykaa. I feel whatever hullabaloo has taken place and the stock has fallen, uh, I think at 150 we have a 20% downside maximum, which means 120 could be your stop loss here. and the upside could be pretty big over the next 2 to 3 years. So next 1 year could be good, but I'm taking a 3 year time frame on these stocks. So if you look at Nykaa, for instance, uh, and you look at their sales projections and everything, 5,200 crores of sales should come in for FY23 for this quarter. So right now, at the moment, is that 5,200 crores of market cap for FY23, and the market cap of the company itself, 5,200 crores of sales is from Nykaa is what is expected, and the stock is at a market cap of 43,000 crores. So it is trading at around 8 times sales, current sales. If you look at something like FY24, then we are looking at least a 40 to 50% upside on the sales front. So 7,500 crores of sales in FY24, and the market cap is 43,000 crores. So that's around 6 times, and even less than that, five and a half times sales. I think this is extremely attractive. Remember that Nykaa has come out in September with very strong numbers. The numbers weren't that bad. If you look at the profit figures and margins were at around 5% versus 4% last quarter. Margins were 5% versus 3.3% in September 21, and margins were strongly negative, but has come out to be pretty strong uh, for I mean this quarter, so strongly negative in 2019. So I feel if the trend continues, and although people might think that on a PE basis it is very expensive and all these new age stocks are not quite something to be looked at, but if you have a 2 to 3 year time frame, at least a 3 year time frame, Nykaa could easily double from here, from these 140 150 levels in 2.5 to 3 years time frame. So that's my first pick, that is Nykaa. Second in this list is an interesting company that not many people talk about at this point of time because of the inflationary pressure and the fact that prices, or you can say raw material prices, have gone up sharply, is a Jubilant FoodWorks. I think around 500 from where it used to be, and again with the current PE that it is trading at and everything, at a PE of around 70 that it is trading at, it's at historical lows with respect to its valuations. So in my opinion, these are very very attractive levels to get into Jubilant FoodWorks. Just that one has to understand that if the numbers really get bad, then only we could see a fall of 20% from here. But that is what I'm taking. I'm sorry, that is what I am taking into account. So 20% downside versus 100 to 150% upside over 2.5 3 years is what I'm looking at. So at current, you can say P, its historical median PE has remained 88 over a 5 year period. Currently, it is trading at 70 times FY23 earnings. And I think just on a PE expansion basis, we could go up 30% from here. And if the numbers improve even further, this is another doubler from here in the next 3 years. It came out with decent margins of around 24%, which was the same figure before the pandemic. So they are at the similar level. And currently, we are looking at a scenario where the numbers should only improve going forward. And December quarter remains pretty strong for both these companies, and the third one as well, which I'll talk about. All these three consumer oriented companies, the festive season is pretty big. Plus we had the World Cup, cricket and football in this quarter. We have the IPL coming up starting in late March. So I think the whole of a quarter which remained very subdued will be pretty big, because April into June normally is not a very big quarter for these companies, but Jubilant should do well there because of the IPL and so on and so forth. So I think the numbers are set to only improve in this field as well. So Jubilant around 500 after being down nearly 50% from the top, looks good. Something like Nykaa is down, I think 75 to 80% from the top. They have been bruised and battered. So that is the time to look into it. They are very good franchisees, strong management, strong companies. They are not, you can say, micro cap companies that we don't know about, but they are coming at reasonable valuations. Just that you need to have patience to hold on to them from a 2.5, 3 year time frame. The third in this list, that I believe a company that should do well is Asian Paints. I think Asian Paints, from you can say, 2 to 3 year time frame, looks very good. In fact, from 1 year time frame as well, the way it has consolidated and haven't done much. Uh, I think it is set up, and so there's a disclaimer. I have Asian Paints in my portfolio as well, but I feel currently it is trading at PE of around 80 or so. Based on FY23 numbers, it is trading at 77. It hasn't done anything in the last 1 year. In fact, if I look at a 1 year chart, then the stock has virtually fallen 8%, 33.70 to 31. Uh, what's the price right now? So it is around 31.30. So hasn't done much, 7.67% down from a 1 year time frame where the market has gone up. I think whenever that happens, so if you look at its historical performances, whenever such consolidations have taken place, uh, from a stock price point of view, uh, in a company of that stature like Jubilant FoodWorks, there is a huge, you can say, up move. So 1.5 years, if you look at from Jan 2021 till June of 2022, in 18 months, the stock fell around 8%, and then the move happened, which was pretty big. So uh, my point is here is that the numbers are improving for the company. Yes, oil prices are a big negative for something like Asian Paints, and there are other raw material costs that combine with it, and the numbers weren't that great in September. The margins fell, but this is a company of high pedigree, and if you look at margins of, say, September 19, the margins fell by 4%, and that is the major reason why the stock fell so much. But if you look at the sales growth has been quite phenomenal over this 3 year period from September 19 to September 22. The sales growth have been 70%. So that has triggered the profit growth from around 840 crores to the level it ended up. But eventually, if you look at September 19 numbers and September 22, the profit growth declined. So that is the kind of margin pressure that the company is seeing, and the competition that the company is seeing. But we have seen over the last 30, 40 years that how companies like Asian Paints have come out of such competitions and have worked hard. What I'm banking on have come out and come out as winners. So what I'm banking on at the moment is its PE, which is at around 77, 78, which is at a historical lows. It was around 77 in October 19. It is at 77 today. So market has already given it a P, which is very much lower than what it used to be, and because of the kind of numbers that it is producing. So in my opinion, uh, Asian Paints can be added here, and especially if you can get it around 3,000, that would be the best level to get into Asian Paints. Again, a doubler in the next 2.5 years. That's what I feel. Maybe earlier than that. Looks good on the charts with the kind of consolidation it has shown around 3,000 3,100 levels. Nirosha Kilpest has come out with very decent September quarter numbers. I'm looking forward to December numbers. If you can get the stock around 420, 410, 420, that would be very good levels to get into something like Kilpest. and you should end up making a good amount of money if you can hold on for the next 2 years. I think a lot of things are happening over the next 2 years. It should do extremely well. So if you can get it between 410, 420, definitely uh, Kilpis is a decent buy. Again, a disclaimer, I have the stock in my investment portfolio. So these are the three stocks that I believe should end up doing extremely well from 1 year as well as from a 3 year time frame. So one can definitely look at and then probably have a greater understanding and then look to invest into them. All right, so I'm ready to answer your queries for the next 5 7 minutes. You can use the super chat and super sticker feature that will help me grow the channel. That will help you all ask me questions and eke out answers in greater detail. Okay, so Iron Exchange is a stock that one can definitely look at, but the issue with the company has been that some of the year over the last 3 4 years, some quarters have gone well, others have been subdued. So the numbers have been up and down. If the numbers end up being consistent, then the stock should end up performing well. So it's a hold at the moment. Okay. So KPI green, Mr. Pawar, I believe that one has to be patient with this stock if you have bought at higher levels. If you have bought at 700, 715, then no need to worry. The kind of numbers it is producing should come out with 54 rupees of EPS before split numbers. I'm saying 54 rupees of EPS. So around 750 is its base. And I believe that 2 years down the line, the stock should be trading at very high valuation from the current ones if the numbers continue to grow the way it has been growing. So my point here is somebody who can take risk. Again, a disclaimer, the stock is in my portfolio. uh Somebody who can take risk of losing 50% in the stock can make 3 4x to 3x in the stock. So that is the kind of volatile move KPI green shows. Nagaraju, Map My India, this is a stock that has perplexed me with the kind of fall that the stock has seen, and some of my clients and members do have this stock, and yes, it is expensive. I do not say that it is not expensive, but the fall has been excruciating, and uh, at this point of time, I can only say that it's a hold. We have to then understand how the numbers pan out for December and then only take a call. The margins did dip, but they are not that bad the way the stock has fallen. So if you have not, you can say, sold say 10 15% lower from your price, and now you are say down 40 50%. I'm talking to those who have already bought the stock and they are down 50% 45%. uh, they should hold on to the stock from the next 18 months point of view. Those who want to buy, wait for the numbers in December and then take a call, because we don't know what is the reason behind such a steep fall for the stock. Uh, there could be anything, but the stock has vertically fallen from levels of say 1380, 1370 or so, 1400 or so. In fact, from 1400 uh, in October, the stock has gone down appreciably to around 1050 levels in no time. In 2.5 months, it has shaved off something like 25 30%. So that is how the nature of the market is at this point of time. It's just a hold for those who have bought into the stock. Those who want to buy afresh can probably wait. Okay. So I don't track Piramal Enterprises or Pharma, so I won't be able to comment, Mr. Pawar. And Marksons as well, so I won't be able to comment there as well. Again, Saregama, another stock that I don't track, and one thing I can say there is that the valuations are now getting very stretched, and the way the stock has moved up, the only thing I can say is that wait for major declines to even think about getting into it. Okay. So Nitin Spinners is one of the earliest stock that I bought in 2012 or so, if I remember 2013 or so. And in 2012 13 it used to trade at 25 27 rupees or so, made some money and exited. Again, a stock in the textile space, which do not command a very high valuations. So that's why I stay away from such companies. GSFC is something one can look at from a 1.5 year time frame to buy into with an upside of 25-30%. Okay. Microtech developers or macrotech developers is good. One can definitely look at, but I do stay away from you can say the real estate space. I believe the space altogether is not something to really invest into at this point of time. We have the situation of the pandemic and many other things going on again. So probably stay away from that space and look at consumer centric companies that could still do well. Once, even if the things go bad, they'll come back with a vengeance once things stabilize. So, Arjun, I know you are asking about Sequent a lot. My point here is simple. As I said with Map My India, those who have not bought, wait for numbers to come up. Once numbers improve, then buy. Even if you have to buy 30% higher, that is better rather than buying now and then regretting that the stock goes to 60 or below that. Uh, again, those who have the stock and are losing and don't want to sell, probably wait it out. This phase will go away and numbers should improve, and then the stock will rebound. But very hard to say when, because ROEs and ROCs and everything has taken a beating and numbers have not been at all good. And that is why larger investors have lost faith in the stock, and have fallen on the wayside. If I look at the numbers, then it used to produce 16-17% margin, which has gone to zero at the moment, and the margins are going into negative. So, a lot of problems that have crept up for something like Sequent at the moment. Okay. Sigachi entry level is good for investment. I think it is. I think Sigachi can be bought here. Current levels are good. I think in Sigachi, what the thing is that the margin of safety is pretty big from these levels. I think if you look at from 270 levels, the major downside could be 230, 240, something like that. So the downside is around 15% maximum, but the upside could be huge because the stock is trading at 17 times FY23 earnings. And I think FY24 could be big because of their, you can say, new plant getting on stream this month. So March numbers should be good, and then FY24 should be good. So I think looking good at these prices, one can definitely invest into, but keep stop losses in mind and do not take major risk into such small cap companies. That's what I can call. Again, Sigachi is something that is in my portfolio, so that's a disclaimer. Relaxo footwear is also good, but on declines. I think whenever the market crashes or goes down, that is something that one can definitely look at buying. Okay. Wipro, I think IT one can definitely look at from Jan Feb onwards. I don't think short term it can perform, but larger IT etc. Wait it out for a month or so and then get into it. And once technical charts look even more stronger from a long term point of view, 1 year point of view, I think IT can perform. I think Europe should recover. US should recover going forward second half of 2023, and then the move could be pretty big on the upside. And one has to position for that earlier rather than wait for that move and think that okay, you'll get in. I give you an example of Kilpes. So it went to 300. It is now at around 440 or so, and it went to 500. So that is the kind of move it happened. So from 300 to 500 happened in a matter of few trading sessions. So you have to position yourself early, and you should be ready to take a hit on your portfolio, on your stocks, to make money. That is what I have understood over the last 11, 12 years in this market. uh, so I think you're asking about Somani Home Innovation if you're talking of Hindware. uh, if that is the case, then it is a buy on declines, and I think that stock also is extremely undervalued and should end up performing over the next 2 to 3 years. So that's the call. Laopala, again, another stock that is less talked about, can be invested into, but I don't know when the move will happen. Numbers are decent and should improve going forward. So that is also a stock that one can definitely look at. All right, guys. Thank you. Thanks a lot for being online. We'll try to be online again in a couple of days, probably on Friday evening and then on Sunday as well. And from next year onwards, things should streamline and come back to normalcy. But we could be having 3 live sessions, 2 more live sessions over the next 4 days. So that's the thing. I'll definitely inform you about the timings. Thank you. Thanks a lot. Please do like and subscribe my channel. Hit the bell icon so you can get my video straight away when I post it. And support me on Patreon. You can get yearly or annual WhatsApp membership as well, in which I discuss about exclusive stocks, companies, and also you can ask me any number of questions there after taking the membership. So you can email me for that as well. Thank you.